Hi friends, welcome back to my channel. I hope all of you are doing very well. Today's video is on section 115 BAA, taxation of certain domestic companies. This section was inserted through the Taxation Laws Amendment Act 2019, and this section is very much relevant for your exam purpose, and there is maximum chances that a question will come from this section in your exam. So stay connected with my channel and stay till the end for better understanding. You give your valuable suggestion in your comment box. Your suggestions are very much important for us. Thank you. Start the class. Section 115 BAA, tax on income of certain domestic companies. This section was inserted by the Taxation Laws Amendment Act 2019. Why this section was introduced? This section was introduced to provide incentive to the domestic company. This section was introduced for providing for concessional rate of tax and exemption from minimum alternate tax in respect of domestic companies with effect from assessment year 2020-21. So this section was introduced with effect from the assessment year 2021. This is very new. This is very new section. So it is very important for your exam also. If 115 BAA is applicable, then MAT is not applicable. Minimum alternate tax is not applicable. What are the eligibility? What are the domestic companies covered into it? The SSC, the eligibility criteria is any domestic company. This benefit can be availed by any domestic company. What are the conditions that is required to be fulfilled? The conditions are the total income of the SSC is computed. There are some exemption. If you cover under 115 BAA, then these exemption benefit you will not get. Without so if the SSC opt for 115 BAA, then the income of the SSC is computed without any exemption or deduction under the provision of section 10AA. 10AA is exemption from SEZ units, special economic zone units. Section 32(1)(2)(a), additional depreciation. You will get the normal depreciation, but you will not get additional depreciation at the rate of 20%. Section 32(a)(d), investment in new plant machinery in notified backward area. You will also not get the benefit of 32(a)(d). 33(a)(b), which is applicable for tea, coffee or rubber development account. This benefit will also not be available if the domestic company will go for 115 BAA. 35, section 35, this is for the scientific research. 35(a)(d), specified business. 35(CCC), expenditure on agriculture extension project. 100% reduction was allowed, but if you go under 115 BAA, so you are not eligible to get the benefit of section 35(CCC) and section 35(CCD), expenditure on skill development project. You will also not get the benefit of section 35(CCD). In summary, if a domestic company opt for 115 BAA, then income of the domestic company is computed without giving effect of section 10AA, that is for special economic zone units. You will not get the benefit of 10AA. 32(1)(2)(a), you will not get the benefit of additional depreciation. You will not get benefit of investment allowance in new plant and machinery. You will not get the benefit of tea, coffee and rubber development account. Scientific research 35, a specified business you will not get you will not claim the benefit of 35(a)(d). 35(CCC), expenditure on agriculture extension project, and 35(CCD), expenditure on skill development project. All these sections benefit are not entitled to claim if the domestic company go for 115 opt for 115 BAA. There are some reduction under chapter 6A. We not get the reduction benefit under chapter 6A. No reduction chapter 6A is allowed except section 80JJAA. This 80JJAA is reduction for additional employee cost. Section 80LA, this benefit will be available to a unit which is located in IFSC. And section 80M, reduction in respect of certain domestic company of intercorporate dividend. Intercorporate dividend. In summarized way, if a domestic company opt for 115 BAA, the total income is computed without giving effect of 10 AA, special economic zone, additional depreciation, investment in plant machinery, tea, coffee, rubber development, specified business, agriculture extension project, and skill development project. Chapter 6A benefit is also not available except 80JJAA, that is for the additional employee cost, 80LM, 80LA, that is for the that benefit is given to a unit located in IFSC, and 80M. So 80JJAA, 80L and 80M, all these benefits are available. And beside this, no benefit from 80C to 80U is a company will get if the company opt for 115 BAA. What are the other conditions that require to be fulfilled? The total income of the SSC is computed without setup of any loss carry forward from any early assessment year. Means previous year setup, previous year carry forward loss also expired if the company opt for 115 BAA. So there is no setup of loss, or there is no setup of loss of previous years. Second thing, loss or allowances for unabsorbed depreciation deemed so under chapter under section 72A, if such loss or depreciation is attributable to any of the reduction referred above. Unabsorbed depreciation will also not get. And after considering depreciation under section 32 other than depreciation 32(1)(2)(a), normal depreciation is applicable. Additional depreciation, if anything is left, that is also expired. So if a domestic company will go under will opt for section 115 BAA, then carry past previous year losses lapsed, unabsorbed depreciations also lapsed, and additional depreciation, any remain additional depreciation also lapsed. The loss and depreciation referred to in 2 and 3 shall be deemed to have already been given full effect to, and no further reduction for such loss and depreciation shall be allowed for any subsequent year. Such loss and depreciation shall lapse. I think you got the point. So if a domestic company opt for section 115 BAA, then the income of the SSC is computed without giving benefit of previous year losses, previous year unabsorbed depreciations, or any leftover additional depreciations. All these previous year losses, unabsorbed depreciation, and also additional depreciation, unabsorbed additional depreciations shall lapse. How to exercise the option? How to exercise the option? The domestic company, the option to pay tax as per this section is exercised in prescribed form on or before the due date specified under section 139(1) for furnishing of return of income for assessment year 2021. Assessment year 2020-21 for or any subsequent assessment year. So if a domestic company wants to opt for section 115 BAA, so at the time of filing return under section 139(1), that domestic company in a prescribed form apply for 115 BAA, opt for 115 BAA, provided that once in always in, once out always out. Provided that one such option is exercised for any assessment year, the same shall apply to all subsequent assessment year. Therefore, the option so exercised cannot be withdrawn by the SSC subsequently for the same or any other previous year. Once the domestic company exercises the option of 115 BAA, that option shall remain be valid for the subsequent assessment years. So the tax rate, If the above mentioned condition fulfilled, the SSE shall have an option to pay tax at the rate of 22%. At the rate of 22%. If the domestic company opt for section 115 BAA, then the tax on then income tax on their income is 22%, and it shall be increased further by surcharge of 10%. Here, in case of surcharge, there is no turnover criteria, no income criteria, any income. If a domestic company opt for 115 BAA, then on any income, the surcharge is 10% on the income tax is applicable, and thereafter health and education cess of 4%. So effective tax rate is 25.168%. But there are some special cases of income which are not covered under the tax rate of 22%. What are these special cases? The following income shall not be taxed at the rate of 22%, but at the rates specified therein. What's are that rate? Capital gain, a short term capital gain 111A, that is the special rate, that is 15%. Long term capital gain under 112, if you take the benefit of indexation, then 20%. If you do not take the benefit of indexation, then 10%. Long term capital gain under 112A share market wale, that is the 10%. Profit and gains of life insurance business 115B 12.5%. Lottery income 30%. Dividend receipt from foreign company 115 BBD 15%. Dividend receipt from foreign company 15%. Unexplained cash credit 78%. 60% is tax rate, 25% penalty, 25% is surcharge, and 4% is cess. 78%. Income from patent 10%, and income from transfer of carbon credit 10%. The above rate shall be increased by surcharge of 10%, and the health and education cess by 4%. So the tax rate under section 115 BAA is 22%, and that is increased by the surcharge of 10%, and health and education cess by 4%. So effective tax rate for the company opted for 115 BAA is 25.168%. But the domestic company shall get the benefit of 111A short term capital gain, and if there is any short term capital gain from the share market, then the tax rate is 15%. Long term capital gain 10% or 20% as the case may be, and long term capital gain from the share market, that is 10%. Insurance business, carbon cash credit, income from patent, all the benefits, all the special rates are applicable. On failure to satisfy condition, there are some conditions that if you opt for 115 BAA, you have to forego certain benefits, forego certain deduction, certain exemptions. So if on failure of to satisfy condition, if in any case if condition is failed, the option exercise would be invalid. On failure to satisfy condition, in previous slides I have discussed elaborately regarding what are the conditions that is required to be fulfilled, but in case of failure of these conditions, options exercised would be invalid in assessment relevant to the previous year and subsequent assessment year. Once out, always out. If a domestic company failed to satisfy the condition, then that company opted out from 115 BAA forever. Consequently, other provision of the act would apply to the person as if the option had not been exercised for assessment year relevant to the previous year and subsequent assessment years. If SSC opts for section 115 BA, then provision of MAT is not applicable. I have told you earlier, if 115 BAA or BAB is applicable, then MAT provision is not applicable. Brought forward, since MAT provision is not applicable, so brought forward MAT credit cannot be set up. All these credits shall lapse. All these credits shall lapse. Brought forward MAT credit cannot be set up against income tax computed under 115 BAA. If a company has brought forward MAT credit, it can first exhaust the MAT credit and thereafter opt to section 115 BAA in a subsequent previous year. It is suggested that if a company has a huge MAT credit, then first companies should exhaust their MAT credit, then opt for 115 BAA, because once a domestic company exercises 115 BAA, the MAT credit will lapse. MAT credit will lapse. if options exercised under section 115 BAB has been rendered invalid. Regarding 115 BAB, I will discuss in next video. But here, if I here I give just a concept. I want to give it here, that if a option of 115 BAB is invalid, if the option exercised by the if the option exercised for domestic company at the rate of 15%, and that option is invalid, failure to satisfy the conditions, if that option is invalid, then that company may opt for 115 BAA. Then that company may opt for 115 BAA, and accordingly such company may pay tax at the rate of 22% instead of 15%. Surcharge of 10% shall apply irrespective of the amount of total income. In normal case, in case of domestic company, in normal case, the surcharge is up to 1 crore to 10 crore is 7%, above 10 crore is 12%. But in this case, if the company opt for 115 BAA and BAB, irrespective of any amount of income, surcharge is 10%. Surcharge is 10% of the income tax, and that surcharge does not depend on any amount of income. So thank you very much. Up to this, I have discussed 115 BAA elaborately. I have discussed, and this is very new section, and this section was introduced to give the benefit of domestic company. It is very much relevant for your exam purpose also. You see my video. In case any observation is there, I think I have clarified all the concept, but in spite of that, if you have any problem, you can send mail me also. My mail ID is amjaclasses.ca.csa.cma@gmail.com. You give your valuable opinion in the comment box. Your opinions are very much important for us. So thank you for today. Thank you very much.